Hello everybody, Jackson here with the Wealth Squad. Today we will be talking about FinViz and finding stocks in this current market. We're going to look for deals today. So right away we're going to change this market cap to USA only. And I'm just going to go through here, decipher what I would choose as criteria to my stocks that I'm looking to invest in. PEG, we'll start with under 2. The lower the better for the PEG ratio. That's the PE ratio over the earnings growth in the past 5 years. So the lower the better, but 1 is considered fair. 1 is considered fair. So 1 to 2 is considered a little overvalued, but we could choose under 2 right now just because we could watch the stock, we could add the stock to our watch list, and it could fall even further, bring that PEG ratio under 1. We never know. So we're just going to do under 2 to start with. Forward P under 25, and then PE just under 30, because the forward PE, we want the earnings to grow in the future, and that's why the forward PE is less. So we have 773 left. Market cap, we're only interested in companies over $2 billion right now. And then we're going to do some liquidity ratios. Quick ratio over 1. That's basically the short-term obligations versus the cash on hand. So over 1 means that the company has more cash than it does short-term debt, which is good, obviously. They don't have to raise money or, get it from other avenues. And that just ensures it. This takes into just the cash and cash equivalents, while the current ratio essentially the same thing, but it takes into inventory. So this is more conservative than the quick ratio. So this saying over 1 is better than this saying over 1, if that makes any sense. So we're going to look at EPS growth next 5 years. Obviously, we want that to be positive. Great. Now let's make that even more. We'll do over 10%. And then next year we want over 10% over 10%. 67 EPS growth this year, over 10%. And then we want some of a deal, so not oversold. Not overbought. So we want a company that's trading less than what it usually is. So we have 45 right now. We could do price to cash, price to book value, ROE, this return on equity. This just basically shows what the company efficiency is for the dollars invested. If they can make that much money on that much money invested, it should be better than 15%, and that's why I chose that. So we have 28 left. That's a good number to go through. I'm just going to click on basic. This is a great way to decipher and find stocks that you might be interested in to invest. So this gives us a chart and some basic info for a company. So we're looking at Microsoft, forward PE of 23, PEG of 1.7. That's pretty high numbers. Usually, like I said, you want a PEG around 1. 1.7 is not too good. Besides that, not looking like much of a deal. However, it is growing very much so, and it is at a deal where you can see it was trading at 350, now at 277. So not too bad. It's a solid company, just not trading at a big enough discount for the valuation. Same with Google here. You can see earnings growing very well. However, the valuation just is not there. Better than Microsoft, and still trading at a sizable discount, 150 to 114. Schlumberger, you're looking at a oil and gas equipment, and that's natural resources. That's a commodity. I don't like dealing with companies that trade commodities. I think personally it has thin margins and not something that I'm personally interested in. So I'm going to skip Halliburton as well. Avantor, especially chemicals, not what I totally know, but we could just look PEG 1.5, 15 PE ratio, pretty good. Still a high PEG. You could see the earnings growing pretty dang fast in the last 5 years and this year. Besides that, relatively conservative. We have FleetCor, and of course you're going to get these companies that you just haven't really heard of. 17 billion market cap, FleetCor. However, it does have a 13 PE ratio and a 1.27 PEG. That is something to look into. boys and girls. So we're looking at a solid PE ratio, but most importantly, a solid earnings growth. And information technology, we all know how profitable that business can be. NetApp, I have heard of before, a 12 PE ratio, 1.7 PEG. That is looking pretty steep, but the PE of 12 is not bad at all. Also growing very well with the EPS. Insight, I'm gonna guess that's how you say it, biotech. Not something I'm interested in. Entegris Semiconductors, we can see here PEG of 1.75, 24 PE. Not looking like much of a steal here, but earnings are growing pretty nice. So not terrible, but then again, I'm looking for deals. Western Digital is a company I've been following for a long time, and it's kind of that value stock that stays a value stock, never really shows its true value. It's always undervalued, right? You can see a 4 PE of 8.28 and a PEG of 0.4, which is amazing, which is absolutely amazing. But then we have the EPS also growing very, very well. This is just a stock that doesn't seem to catch a break. You can see it's just been 46, and I can check the stock out later, and it always is around this range, right? It just never seems to open up and explore its actual, you can see target price 62, hasn't hit that since June. Just a tough stock to be in, but not a terrible value play at all. A pretty good one, I'd say. Let's go a little fast here. Darling Ingredients, packaged foods, pretty dang nice deal here. You're trading at sort of an expensive rally from the upper 50s. EPS growing very nice. 4 PE of 11, PG 0.4, very nice. I don't know much about that. Hasbro, we all know Hasbro as the board games and all that. 4P of 14, PG 1.19. This is more seeming like a less of a modern company, so I would personally stay away. It's more like board games in the past, that type of stuff. Tapestry, luxury goods, they own a whole bunch of luxury brands, and you can see they're making some good money doing so, not trading at a terrible discount, from 46 to 35, but they are trading at a solid valuation. Mattel, same with Hasbro, one of those companies I'm just not too sure about with the industry going forward. Hess Midstream, they're doing oil, not interested. Specialty industrial machinery, something I don't know much about. ITT, however, the valuation for the PEG is pretty high. 4P of 15, not too bad at all, with some solid earnings growth. Ralph Lauren, they do make clothes. You can see trading at a very low valuation for doing so, with a solid earnings growth. So Ralph Lauren, something to look into. Biotech, not something I'm familiar with. Timken Company, not something I've heard of yet, but valuation looks pretty dang good. So I might have to look into this one. 1.1 PEG ratio. Timken, TKR, or TKR. And then Columbia Sportswear, I have looked into before, trading at a heck of a deal. I have a 0.46 PEG ratio. Solid earnings growth. Fox, this is apparently making recreational vehicles, not trading at any good looking discount. I'm sorry, the discount's there, but the valuation is not. Cabot Corporation Specialty Chemicals, not a terrible valuation. PG is pretty dang high. Now we're getting to companies that you probably haven't heard of. Allison Transmission Holdings, auto parts, not a industry I'm familiar with. However, it doesn't look like a bad deal at all. Herc Holdings, rental and leasing services, same here. Not sure of the industry, but doesn't look like a bad company to look into. Select Medical Holdings, same thing here. However, the PG is pretty dang high on this one. The Brinks Company, PG 1.09, 4P at 8.59, solid earnings growth. I might have to look into this one. It is very small, but I'll take that. And then lastly, TEX or Terex Corporation. They make farm equipment. Doesn't look like a bad stock to be in. And lastly, we have Sonos company I've been following since the IPO a while back, not looking like any sort of deal right now. However, trading at a large discount to the price. So the valuation, not so much. So I hope this gives you some sort of guide of what to look for in a company, guys. There are some deals on here that you should definitely look into personally. I will as well. So thanks for watching. Hope you learned something, and until next time.